Ladies and gentlemen, and welcome to Capital A. I'm your host, Ads, and welcome to a new section, the how-to section. I'll be bringing you videos to help beginners and advanced traders understand a few basics of trading and some advanced tips to help you improve. Today's video will be about the basics of placing a trade and a few things you need to understand before you even do that, before you enter this market, okay? Tip 1, find a point of interest in the market and remain patient. Let price come to your point of interest and then you can take your action. Entry is everything when it comes to having a successful trade, okay? Tip 2, make sure your risk to reward is in line with the trading plan that you have created. So just make sure the trade makes sense, okay? Tip 3, it's imperative to know how much you are risking. You must calculate how many pips you are risking and the value you stand to lose. This is a part of trading. Many traders do not put the level of attention and detail that it requires. Knowing what you are risking will bring a sense of understanding and relaxation in your trading, even if your trade is not going well. Okay, so you've risked £100, it's in minus 50, you're still at that level of relaxation. Bonus tip, be sure to use the pip value calculator before placing any trade. And later on in this video, we're going to take a look at how to use that effectively. Okay, so with that, let's get started. Okay, guys, let's get into how to place a trade. And again, these are a few things that we're going to be talking about just throughout the lesson. We're going to be going through the point of interest, the entry points, the pulling the trigger, stop loss, pip calculator, taking profit, and managing the trade. Okay, so let's get straight into it. Now, the first thing you need to do when placing a trade, when placing any trade, is determine 2 points of interest. Okay, now what I've got here on the euro pound is I've noticed that there's been a bit of price action in this area that I can tell has been manipulated. Okay, so this is a 4-hour time frame. So for 4, 8, 12, 16, 20, 24, about a day and a half, price is stuck in this area. Okay, not much movement, not really going anywhere, as you can see. Now in the middle, where my yellow highlighted box is, as you will now see, there's been a bit of manipulation there. Okay, price shoots up and then shoots down. That is a scenario that I'm looking at, and it's a scenario that I'm familiar with. So the first thing I've determined is my entry points. Okay, so I'm looking at just marking up this area. So I've marked up the yellow area with 2 black lines, and the black lines have given me 90.55 or 550 and 9800. Now 9800 is going to be the main entry point. Okay, now if I just roll on a bit more. Okay, so regarding the points of interest, I have now determined 2 points that I will be happy to take trades from. Okay, I will take a small risk at the foot of my manipulated candle. So that's this line here. The reason it's here is to let me know when price gets back into my manipulated area, I've got a line to let me know it's getting there. Okay, so I'll take a little entry. Let's say round about the 9600 over here. We'll do a 0.20 at the 9600 sell entry. Okay, but our main entry, the main trade, is going to be the middle line, which is obviously through the middle of that candle. And that's where you'll put your bigger risk. Okay, so now what I'm doing is just showing you 2 ways of entering the market: bigger risk, smaller risk. Okay, so pulling the trigger. Price has now reached your point of interest. Okay, it's now there, as you can see, with this blue candle shooting up. This is one of the hardest parts of trading. It's now time to take action. It's now time to pull that trigger. And this is where the emotions are going to shoot to the surface. Okay, you will never completely feel in control, but a stop loss will give you that relaxation around your trade that you need. Okay, I'm just going to quickly take you through when price gets to that point, what you'd need to do on your phone. Okay. Hey guys, so just quickly now, what we're going to do is just show you how to actually place that trade on your phone. So remember, price is in that point of interest. You pull out your phone, you go to your MetaTrader 5, you get your quotes up, and here we are. I'm looking for the euro pound. Now remember guys, the price at the moment isn't at the current time of that trade, so just bear with me when you see different numbers on the screen. But what you'll do is you'll go to click on euro pound, and this will pop up here where you click on trade. Okay, so we're now ready to trade this currency, and at the time price will be fluctuating, and of course it would have been a lot closer to the 89 mark, and here we are now ready to place that sell. If you want to do an instant execution, as you can see, it's already marked out for you. We then go to that lot size,
we put in the 30, okay? And then we can enter our stop loss, which would have been 0.91100, like so, which is that 30 pip risk. So there's your £90 that you're risking. Don't worry about the take profit for now. We will get to that. It's just about getting that entry and the stop loss punched in. Once you've got this in, you can then hit that sell button and the trade will instantly execute you into the market. Now, there is other ways of doing this, and it's a sell limit. So when price was at slightly below our entry level, what you can then do is set up a trade that will trigger you in when price reaches the area. So again, simply just by doing this, our entry was 89,800, if I'm correct, and our stop loss was 90,100. And there you go. That would be as simple as that. And as you can see, place is now highlighted. You place the trade and you've now entered a contract into the market. It's as simple as that, guys.
Okay, guys, so price came to that area. We've now punched it in on the phone. Just going to talk about stop loss quickly, okay? So the next thing you must do is determine your risk, which comes in the form of a stop loss, okay? It's very important you are comfortable with what you are risking. In the picture, you will see, like we just punched in, the entries at 9,800 and the stop loss was at 91,100, which is a 30 pip difference. We must now learn what type of lot size we can place on the trade using the pip calculator, okay? The lot size will determine the value of each pip. So let's just say we're going to be willing to risk £90 on this trade, okay? Now what you would do is you'd use this website here, okay? And we're just going to work out what value we can get to for £90. So as you can see, 0.10, £30 risk, 0.20 was a £60 risk. So there we are, 0.30. That's the value we're going to punch in on the trade. And that's going to be, if price then goes and hits that stop loss area, that's what you will lose. You will lose £90, okay? So just going through that. Twin trading. This is another way of just being able to have a bit more freedom when you trade, okay? Very powerful tactic. You place two trades at your entry point, but now we will split that lot size in half, okay? So two entries at 0.15 will now allow you to close one trade, securing profits, short-term target, and then allow the other one to ride, go for the longer-term targets to then see the bigger profits. In that, what you're doing is by closing that first trade and securing some profits, you've now almost made the second trade become nothing to you. You've made some money, you've protected your capital, you haven't lost anything, and now you've got another trade riding in the market. Okay, very powerful twin trading. Get used to it, have a go at it, and again, like I say, very powerful method in Forex. Okay, so we've got our stop loss area, we've got our entry area. Now it's the fun part, it's taking profit. I aim to have 3 take profit areas. Number one, that short-term target. So for example, in this picture here, the nearest low was this. So this was my first target to be reached. And as you can see, 140 pips, it got there. Second target, your main target. Now this will be where you actually see the trade going. And that's where you're going to maybe close it. And you can make a decision at that point. But this is where you think the trade will turn around, okay? Where it might turn against you. So that's your main target. Your long-term target is just kind of a bonus, okay? So once you've hit target 2, you can maybe close a little bit more of the trade and let a small portion ride into the long-term part, okay? So that's just a bonus if it gets there, okay? And again, removing the risk. This is a vital part to my trading methods. And again, it will help you in protecting your capital. Your trade is going well. As you can see, this one, it hit our point and it started to drop. It started to go very well, okay? So remember, we was risking £90 with that 91,100 stop loss, okay? You should now change your stop loss and move it to the entry point where we got in at 9,800. So that red square has now disappeared. This action will now stop you from losing any money at all, okay? If price is to come back up and hit the 9,800 mark, you'll be tapped out, break even with nothing, okay? So again, very important to remove the risk. Managing the trade. Again, let's just talk about how, the things that you would see, the length of time, and how you maybe make some decisions about it, okay? So this one here took 4 days for price to climb down 140 pips. In that time, you'll be met with a lot of different emotions and different decisions to make. This is why it's extremely important you really understand everything about your trade so you can control your emotions with more accuracy. Okay, so again, price starts to come down 4 days later. After risking that £90, you're now at a profit of 420. Tell me, what would you do? Ask yourself, what would you do? Would you close the trade? Would you close half? Again, it's just about understanding what you would do and sticking to your plan. Because as you'll now see, a few more days later, I believe it was, let's say about 8 days later now, we're 280 pips in profit. You're now almost, well, you're basically double at what you just had. Okay. So again, it's just about, it's important just understanding all these little things when you're placing a trade. If you don't, you're pretty much setting yourself up to fail. Okay, guys, that was how to place a trade. I'm just going to quickly leave you with my mentorship program. What you're going to get with me, if you want to learn more about trading, you want to learn more about Forex, I've got a 3 to 4 hours of mentoring lessons per week. So that's what you'll be with me on a Zoom call, just learning, studying, letting me show you all the concepts and all the things that you need to understand. You'll have access to my trading community. That's going to be via Discord, and you'll get early access to my market outlook shouts. Okay, they come at you every weekend and maybe every Wednesday or Thursday. I know it says Sunday and Wednesday there, but sometimes they're going to come a bit earlier. Okay, with that, we're going to be doing homework, setting a monthly test. It's more just to make me understand how you're taking the information in and how I need to develop you and make you better. With that, you'll get access to 10 hours of pre-recorded educational videos, okay? So the things that we'll be going over, you'll have a video to watch as well at the end of the lesson. Access again to my live trades and 24/7 mentoring support, okay? If that sounds good, guys, hit me up on the Instagram here. That's adstar10_FX. Send me a DM. We can set up an appointment. We'll have a talk about what you want to achieve and how I can help you. And again, guys, just a bit more. If you want to reach out to me in a different way, if you maybe haven't got Instagram, you can send me an email. That's capitalatrading@hotmail.com. And I'm on the YouTube. It's Capital A. Again, check the channel out and subscribe. Don't forget to hit that subscribe button, okay? Guys, I've been Ads. I will see you back here for more how-to videos coming. There'll be one about how to use TradingView. So check it out when it comes. And again, guys, just remember, be safe, and I'll see you back then.